Hello everyone, this is the pre-market report video for today 8th May 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, let's have a quick look about what happened yesterday in Indian market. Most of us already aware of it. Yesterday, despite the positive global momentum, Indian market was the only market that was disastrous. And it's all mainly due to the increased algo trading. But the question is, what triggered this? It could be two incidents which coincides with our market fall timing. Day before yesterday, on Monday, RBI induced the fall in market. That was the clear known reason. But for yesterday, I won't say with that certainty. Rather, these two were the most probable ones. First, during early trading hours yesterday, India's National Security Depository NSD and LSEG both individually released their own report, like what FPI foreign portfolio investors did in the Indian market on April month. As per LSEG, except Korea, including India, there was a fund outflow from all emerging Asian market. From India, near $1 billion worth of fund was outflowed from the Indian equities. Then, as per NSD, near 1,000 crore rupees each worth of fund was outflowed from just financials and IT sectors. So, in Indian market earlier yesterday, IT stocks also traded negative, but the final hour short covering kind of pushed it into the positive side. Then they also said near 800 crore rupees worth of fund was inflowed into the telecom space. So only maybe yesterday Airtel closed on a positive note. Then you might ask, what about the Reliance? Isn't it the biggest telecom player in India? Then why they were dropping? For Reliance drop, I can say with some level of certainty. In the last 2 years, Reliance was the biggest beneficiary of Russian oil. Now, because of the increased escalation from Ukraine, the oil production capacity in Russia was disabled up to 15%. Here, Russia won't say to China that they won't give oil because of the production issue, but they can with India. So only yesterday, Reliance Industries applied to US to give them the license so they can import the oil from Venezuela. It's just a temporary supply chain constraint. Hope it improves very quick. These are the two possible reasons yesterday. This, along with the RBI's new policy, increased provision allocation and the low election voting percentage turnout and some uncertainty around the election results, all kind of triggered the Indian market to down. Overall, 11 out of 13 sectors all were down. So it's not a concentrated sell-off, rather the broad sell-off. About institution, no surprise, FII net sold for 3,670 crore rupees, whereas DII net bought for 2,300 crore rupees. Net institution was the fund outflow of 1,300 crore rupees. Then in US market, it kind of started to run out of its positive stream, which was created by Fed chairman last Thursday, then fueled by this very bad jobs macro which was released on last Friday. So all three major index traded around flat plus or minus 0.3% and ended on flat note. However, still S&P 500 managed to close on the positive side for the fourth day in a row. On the other hand, Nasdaq closed on the negative side. And no macro, no external influence in US market last night that I'm aware of it. At the end of the day, Dow Jones up by 0.08%, S&P 500 up by 0.13% and Nasdaq decreased by 0.1%. In case of US VIX, surprisingly, unlike India, it dropped near 2% and moved to 13.25. Regarding oil, no major change, decreased marginally. At the time of this video, Brent crude trading around $83 per barrel and WTI crude trading around same $78.5 per barrel. Despite this okay sentiment in US market, Indian banks ADR crashed. Both banks, HDFC and ICICI, both closed more negative in ADR than it closed on the Indian market. However, in line with the Indian market, IT stocks closed on the positive side. So, what this ADR is conveying is, banks clearly some negative, whereas IT no fresh position, it's just following the Indian market. About GIFT Nifty, early morning today it closed at 22,406, equating it with our spot market. It's same as yesterday morning, indicating the opening somewhere between flat to positive of 30 points. So that's all about the global market. Now let's see the new India specific info. First about Reliance. Yesterday in US, Disney released their quarterly results. Because of it, its share price was down by over 10%. But the important thing for Reliance to notice, Disney plus Hotstar revenue in India dropped 45%. We know Reliance Viacom 18 and Hotstar going to merge. Now their revenue was dropped significantly, so possibly Reliance might be on focus today as well. Second, today TVS Motors going to release their results. At present, the expectation is revenue to increase 21% above 8,000 crore rupees and EBITDA to increase over 30% over a year ago. Just for info, in the last 1 year alone, TVS Motors share price increased as much as 60%. So that stock also will be on focus. Other than that, yesterday, Dr. Reddy's and JSW Energy released their earnings results in the aftermarket hours. Here, Dr. Reddy's net profit increased 36% and the revenue increased 12.5%. In response to these results, last night in ADR, Dr. Reddy's share price crashed over 4%. As a summary, US market closed on a positive note and GIFT Nifty indicating a gap up opening. However, banks ADR, Dr. Reddy's ADR and Reliance GDR all closed over 1% negative. Honestly, don't know how GIFT Nifty is indicating positive trade if all these were indicating negative trade. So let's hope all this ADR and GDR are wrong. Then as per stock open interest, Lupin, SRF, Indraprastha Gas, Voltas, IDFC, Gujarat Gas, Reliance and Navin Fluorine got an increase in open interest along with a negative close indicates the short build-up. On the other hand, its Godrej Consumer Product, Britannia Industries, United Breweries, Eicher Motors, Dauber, Wipro and Marico got an increase in open interest with a positive price close indicating the long build-up. Regarding the things to look out, today L&T, TVS Motor, Hero MotoCorp, Canara Bank and Tata Power are some of the major Indian companies' earnings results are scheduled to release today. Regarding macro, around 11:30 am, Germany's industrial production growth rate is due and in the aftermarket hours for US, mortgage rate, crude oil inventories and very important 10-year note auction are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 50 points gap up, but again for the second day in a row, it erased all its gain and extended the downward journey for the third consecutive session. Thus, on the daily chart, Nifty formed the long bearish candle with a minor lower shadow and continued lower high formation for yet another session. So, technically, the trend has weakened as Nifty fell below the 21-day exponential moving average, and on the hourly chart, head and shoulders pattern is visible with Nifty currently sustaining around the shoulders, indicating the bearishness. In addition, RSI momentum indicator also had the negative crossover, hence all indicating the further selling pressure. So as long as Nifty is below 22,400, possibly it will extend its downward towards 21,980 to 22,000. But there is one silver line positive. It managed to defend 22,300 on the closing basis and the 50-day exponential moving average 22,240 on the intraday basis. Anyway, then in case of Bank Nifty, like Nifty, it also opened 60 points gap up and extended its downward journey for the fifth consecutive session and finally closed at around 48,280. Thus, on the daily chart, Bank Nifty formed long bearish candlestick pattern. Then it also broke down below 10 as well as 21-day exponential moving average. Hence, all indicating more weakness, potentially might push the Bank Nifty towards 47,700 and on the higher end, resistance is observed at 48,800. So, on the weekly options front, the maximum call option open interest was at 23,000 strike followed by 22,500 and 22,800 with maximum call option writing at 22,400 strike, then 22,300 and 22,500. Whereas on the put side, the maximum open interest was at 22,000 strike followed by 21,800 and 21,500 with new put option writing at 21,800 strike, then 22,300. Thus, from the options data, the next key support area is 22,000 with resistance on the higher side at 22,400 to 22,500 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.